Good afternoon, everyone. Assalamu alaikum. Habari zenu za jioni. Thank you, everyone, for attending this second webinar from PKF. For those who don't know me, who are joining for the first time, my name is Mustansir Ghulam Hussain. I'm a managing partner from PKF Tanzania, a firm that is leading in provision of audit, tax, and advisory services. Today, this afternoon, we have gathered to discuss one of the very topical issues, which is how to manage tax audits, tax investigation, and examination. This webinar, again, it's unique because we also have key stakeholders who are participating with us. They will share their experience from a TRA perspective when they conduct audits of the taxpayers. So we have from TRA, we have Confederation of Tanzania Industries who have also participated in this webinar. And of course, yourself as a taxpayers who are going to be sharing their experience, and even TRA and PKF will also share their experience of how the tax audit needs to be conducted. Because at the end of the day, we want to come out that we all understand how to ensure those processes are conducted very smoothly. Before going ahead, I would like to also express our sincere appreciation for TRA to come here this evening, this afternoon, for this webinar. So I would request everyone to pay key attention because through our experience, we have noticed the number of areas that everyone has to learn to ensure this is a very, very smooth exercise. So without taking much of the time, I would like to introduce my team. Of course, I have to my right Hussein Kimweri, and to my left Mustafa Muhammad, who were also present in the first webinar that we conducted. So these are familiar faces. And I will request beautiful lady on my left, Nakaki, who is also with us, to introduce herself.
Thank you, Mustansir. My name is Nakaki, Senior Tax Analyst in PKF. And today we'll be presenting a very interesting topic relating to managing and how to tackle TRA audits and tax investigation. And I'll take you through and let you know what impacts and effects that TRA audit has caused. And also I'll give you the insights of your rights, your obligation, and also you should know the obligation of TRA and the new changes, how will it affect the TRA audit and tax investigation things.
Thank you, Nakaki. I will let two gentlemen from TRA to introduce themselves as we move ahead.
My name is Adam Kobelo. I'm a Principal Tax Management Officer at Domestic Revenue Department Technical Unit.
My name is Martinez Milimalia, Principal Tax Officer based in Tax Education, and also heading the department unit on tax resolution issues.
Thank you, our friends from TRA. So, of course, this is a very, very exciting and interesting topic because there is a lot about to share our experiences. So I will request Nakaki to take us through the first part of our presentation. Thank you, Nakaki.
Thank you, Mr. Ansir. Thank you once again. Well, as I said earlier in my introduction, I'll take you through the effects and impacts of TRA audits and what, due to lack of knowledge, what caused you to actually fail and not be able to manage the TRA audits and tax investigations. From our research, we came across the CAG reports of 2018-2019, whereby we knew that there are so many undecided cases in the appeals board, which it's at least worth to 140 billion USD, which is equivalent to 366 Tanzanian trillion shillings. This is a lot of money. Why did it have to cause all this? This is due to failure of tackling the initial stages of TRA audits. Then today we are here to explain and give you the procedures of managing and tackling the TRA audits. Well, the issue, it would be easy for us not to accumulate a lot of undecided taxes in the appeals board. We could have solved at the initial stage, but due to lack of knowledge, this led to so many undecided cases, which can either be a winning or losing situation for the government and the taxpayer. That means the government might collect that entire amount of money, or it's also impossible. And when the government maybe managed to collect that money, that means it's a deferred revenue. That means it's not even worthwhile for them due to time value of money. And also it can be a sunk cost for the taxpayer business. And it does not even bring the conducive environment as you as a taxpayer doing all this business in the country. Therefore, we are here to advise and let you know that you should have this knowledge of and procedures of tackling and managing the tax audits by knowing your rights, knowing your obligations, and what sufficient documents you would have brought on board so that you could have solved the cases at the initial stage. By doing this, means you would have solved a lot of issues and you could have created a conducive environment for your own business by saving and controlling and having the good financial cash flow in your business. And also, you should also consider time value of money. The procedures and how to go through and tackling the TRA audit and tax investigation will go deeper and deeper by other colleagues, whereby we'll give you the procedures and what to do. And the other thing that I would like to bring into awareness is exactly your rights. You should know your rights, your obligations, and TRA obligations. I know majority of us do not know that we have the Taxpayer Service Charter, which is like a guideline. And the government had decided to establish that charter for the benefit of all parties. That means it's the taxpayer and the TRA offices. They thought that it would bring a good relationship and create a amicable relationship that will help both of us to work friendly and bring good communication. And by bringing good communication, it will bring good information. By bringing good information to the taxpayer, that means it will create voluntary compliance, whereby the government would have increased the tax base and the revenue collection would have increased. So what was the main objective of having this charter? The charter was established in order to stipulate the taxpayer's rights and the taxpayer's obligation. And also it was there to state the fundamental service standards that will administer and guide the TRA officers when they are doing their obligations, that they should abide with the administered laws, the laws that exist, they should not go astray. And this will also lead to a good relationship between them and their taxpayers. What does the book contain, or the charter? It contains a lot of things, but we just mentioned the few, and like we're trying to let you know, and maybe you'll be mostly interested and go through it, whereby you'll find it has what type of services that do TRA offer, what are your rights, what are your obligation and their obligation. And the charter, you'll find types of services that TRA do offer, includes registration. That means registration of motor vehicles. And when you are starting a new business, you're supposed also to attain the identification number as a taxpayer. Therefore, you have to go and be registered. The other thing they have to do is debt management. During these few months, most of us have experienced a lot of our accounts being freezed due to a lot of debt that you're not previously covered. But that is just the part and parcel of TRA's work. They should have to do that. The other thing, the service that they offer is training, especially when they introduce new system, the way how to use it, how to conduct and everything. Like for now, we have the e-filing online returns. Soon they're gonna provide the training on the same and how to use and how to file the returns. They also provide taxpayers education. However, most of us do not attend, thinking that we are so busy that we couldn't even go for that, but this is very potential and essential for us. And it will be easy for you even to understand your rights, know what you're supposed to do and the obligations. The other thing that you find in the book is the TRA obligations. We just mentioned the few, but you can go through the charter and read a lot. Their obligation is to make sure that they provide the accurate tax assessment. By providing this accurate tax assessment, that means you have to have a good environment whereby you provide sufficient documents to defend all the tax liability that will be imposed to you. And also they should make sure that they treat you well, and they should give you a room to defend whatever liability that they think this can be collected. And the other thing, the other obligation is to cooperate with you, make sure that they treat you with respect and dignity. They should not mistreat you. All taxpayers are equal. They should not be mistreated. The other obligation is they have to cooperate with the Board of Appeals Tribunal and make sure that all the decisions are well made. The documents are provided, that they will be working to support anything that they want to, so they have to cooperate with the boards of appeals. I'll just mention the few. As I said, there's so many, and when you go through, you just find so many obligations of TRA. What are your obligations as a taxpayer? The first obligation is you have to pay taxes on time. This is your obligation. The other obligation, you have to file returns. The other obligation, you have to file accurate returns, make accurate declaration, custom declaration, and you also have to make accurate when you're claiming for refunds. I'll talk a bit here on the accuracy of filing returns. You have to be very keen when you're filing your returns. Most of us, sometimes you might find we're running out of time. Then we think maybe it will be easy, me serving 225 as a penalty, and I might file a draft financial or a draft final returns, which has no accurate numbers, which does not even portray my accurate transaction. I want to save the 225,000, whereby I'm creating a problem of 10 billion, 6 billion, a lot of money, whereby I could take time, not saving the 225, then I would do and provide the accurate information to the authority, would have saved me not being penalized or me not attracting the problem of 600 billion, 700 billions. Therefore, you advise, and it's your obligation to provide accurate returns. When you're claiming for refunds, please just provide accurate information. And the other obligation is, if a supplier, just issue receipts, and if you buy anything, you have to request for receipt. What are your rights as a taxpayer? The first thing, you have a right to object on the TRA assessment when you are aggrieved with it. You might find you have a TRA audit in place. Then at the end of the day, come to a reasonable solution with the tax officer. You are aggrieved with their decision. Then you're given a room to object on the assessment that is given to you. And you have also the right to have incentives and exemptions. You have the right to be treated fairly, like as a taxpayer, as I said. There are so many things that when you go through the charter, you'll find. Therefore, after this webinar, I think we're going to share with you the charter and go through it. It's very interesting, and you know your rights, so that you can create a proper environment for both of us. Another issue is the amendment and changes of the law. As we said earlier, this will also affect your business in one way or another. For the TRA audits, they have changed. There are just few changes, especially on providing the documents. In the previous year, the commissioner was given rights, like when he serves you with a note, he would write whatever time he thinks it pleases him to for you to respond on the notice. But now, currently, the law is being narrowed, and actually it's crystal clear that it should not exceed 14 days. Actually, we've come across other issues like with the clients, whereby they're served with the notice. Then after being served with the notice, they actually asked for the extension, and they're given extension. By that time, before the law was introduced, lucky enough, they're given 30 days extension. But for them, they misused the extension, the opportunity. They granted themselves again the 30 days extension. Therefore, with this new law, you're not allowed to do that. So the commission, however, the commissioner is granted is limited for the time being. It's limited not to exceed 14 days, but also if you have a concrete reason, you can ask for extension. It depends, you can ask for extension, and when you're granted, that means it won't even exceed 14 days. That counts to 28 days. You have to reply on the notice. And the consequences of not providing these documents, it will lead that for the initial stage, you're supposed, whatever you're arguing, you're supposed to provide those documents on time. When you go further for objection and appeals, you won't be allowed to take new other evidences unless the commissioner requests you to do so. And okay, during objection, when you are aggrieved with the TRA audits, then you're allowed, as I said, as part and parcel of the right that the taxpayer is having, is to object on the TRA assessment. Then when you're objecting the TRA assessment, we used to write a letter, because we are required as a law to write a letter and explain whatever you're facing, that you are aggrieved with the decision. But we never used to attach documents, the supporting documents. That will be relied on the claims and everything that you have written to the commissioner. But now the law is very clear that you have to attach the supporting documents on whatever you're claiming that it's not right. You have to do it. And make the take note this. These documents that you are supposed to attach, you are supposed to provide them during the initial stage. So if you're objecting, you're not allowed to attach new documents which you're not provided at the initial stage when TRA were doing their audits. And also the commissioner is given power to request if he finds that there is a leakage of government revenue. This means that if he thinks that there is a person who's about to leave the country permanently, so what does he have to do? When you're determining an objection or you're applying for an objection, there was a possibility that you could ask for to pay the less amount of 1/3, or you could pay the entire amount of 1/3, or whichever the greater or the amount that is not in dispute. But now, if he thinks that there's be a leakage of the government revenue, he requests you to pay the entire amount tax liability. That means the amount that is in dispute and not in dispute. This is to save the government revenue. So these are the new powers that are vested to the commissioner. Okay, another thing that you have to know, during objection, as I said earlier, the commissioner is not limited to ask for more information, but you are limited to submit the information. That's why it's really insisting you have to do it when it's at the initial stage of TRA audits. Please just submit whatever document that you are requested to suffice and support your arguments. Provide whatever you have that you think this will be able to support my arguments. But the commissioner can ask whatever, if he's not comfortable with what you have presented to him at the initial stage, then he can ask for more documents so that he can please himself and give a better opinion on whatever you're arguing on. And this should be done within 30 days. He's given a time frame of 30 days. However, you can ask for extension. It depends with the availability and the difficulties of you attaining the documents. And the other thing you have to know that the commissioner is supposed to determine this objection within 6 months. And don't forget that this document that you submitted during objection, they'll be used in appeals. Therefore, during appeal, when you're also aggrieved with the commissioner's decision, then you're allowed to go to the appeals board. When you go to the appeals board, all the documents that were provided during objection will be used, but they won't take new other documents which are not used during the initial stage of audits and objection. After 6 months, when the commissioner does not reply to your objection, you have each and every right to go to the board for further decisions. This marks the end of my presentation, and I'm welcoming my other colleagues to finalize and give you more on the procedures and what to do so that next time, I'm so sure we reduce a lot of numbers accumulated and decided cases whereby we could have solved it at the initial stage rather than going and having a dump all other cases in the appeals board. Thank you.
Thank you, Nakaki, for that excellent presentation. And as I said, this is a very, very topical issue. And one of the issues that is stemming out that we should not run away from TRA. When you get a letter from TRA of about impending audits, and you should not need to run to your friend. Whether do you know that officer? No. It's how to manage the process. And Nakaki has labored on very, very well on a taxpayer charter and various appeal processes that are available. So take it as normal process. And if you manage a normal process very well, I'm sure even TRA audits or tax investigation will be concluded amicably. So just knowing that today we are almost around 315 participants who have logged in so far for this webinar. And I'm sure now Hussein will take us to some of the important aspects of how do we manage our tax audit. Hussein.
Thank you, Mr. Sir. I'll be taking through the entire process of how to tackle the tax audits and assessments amicably, as said by my former presenter over here. But then before starting to dig into details, let us see the behaviors of the taxpayers once they receive the notice of to obtain the information from TRA for the case of conducting audit or tax investigation. So do you usually feel like stressed up once you receive the notice to obtain information for the purpose of conducting audit or investigation? Or do you always feel like you are worrying up, or you feel like even to run away from your office? So now this is just a question to ask yourself. If you decide to run away from your office now, is that a solution? Because it's not possible to run away from TRA because these are the government and we are the stakeholders. So whenever you go, you cannot run away from them. So the better solution, just find, if you feel like you're not comfortable, you are stressed out, you are worrying, you feel like running away out from your office, you need to find a proper tax consultant who can give you a confidence in the aspect of taxation matters of your companies or operational activities. Now, let us see these terminologies, tax audit investigations. We have been normally working through these two words, and I think everyone is familiar. So now let us look into details, the difference between these two main aspects, tax audit and tax investigation. The difference is coming from notification aspect, because the tax audit is normally the taxpayers get notification and normally 14 days prior the commencement of the audit, because you see the audit is a process. The auditors need to examine your books of accounts and other ledgers of accounts and any other information that commissioner feels fit. So it needs you a time to prepare yourself, arrange all supporting documents or whatever the documents requested by TRA. So that's why you are given 14 days for you to prepare this required information. But then under tax investigation, it does not necessarily to be notified. So the tax investigators can just wake up early in the morning from your office, so don't get surprised. This is how it is. So you need to get to know the difference between tax audit and tax investigation in the aspect of notification. Then as well, we have an aspect of period, coverage, and scope. For the tax audit, usually it has a proper predetermined period. Normally, the tax audit is being conducted from 1 up to 5 years of tax periods. So now for the case of a tax investigation, it does not necessarily be less than 5 years. It can go even beyond 5 years. It might be 10 years, 15 years, whatever, because this has no statutory limit of how this tax investigation should end or when should it end. There is no such a kind of a limit. Then in aspect of coverage, normally the tax audit can either be covering domestic revenue taxes, that is including withholding tax, VAT, corporate income tax, withholding tax, employment tax, and whatever the taxes which are administered under domestic revenue department, or the taxes administered under the customs department, like import duties, VAT on imports, and so on. But now, in terms of coverage for the case of tax investigation, both taxes administered under DRD, domestic revenue, and even customs can be conducted at once. So the scope cannot necessarily be either on a tax which are administered under DRD or customs department. It can either be all at once. Then for the case of scope, usually the tax audit explain the scope of coverage. And once we are saying for scope, it's what kind of taxes or what kind of documents these people do need for the case of conducting the tax audit. But then for the case of investigation, we can say there is no predetermined scope. Anything that seems to be useful in the tax investigation can be requested at any time. So don't be surprised, this is how tax audit works and tax investigation work as well. Now let us come to see in the aspect of purpose or the reasons why we conduct tax audit and why we conduct tax investigation. The purpose of conducting tax audit is just to measure or to check just a normal compliance level of a taxpayer, just a normal compliance level. But then when it comes to tax investigation, there must be an element of fraud, tax evasion, or material omission of taxes. So this is when these tax investigations are coming to your office in gathering the admissible evidence in the court of law for the purpose of prosecuting and convicting the tax evaders for the tax crime committed. So these are the difference in terms of purpose between tax audit and the tax investigation. Now let us look at another aspect, which is the skills applied, approach, and objectives. Under tax audit, we normally use officers under tax audit. Most of them have tax knowledge matters, has taxation knowledge, so that they can do the tax audit in a very efficient way. But then for the case of tax investigation, it might not necessarily be the officers who have only taxation matters, but also the officers who have with special investigative and interrogative skills. Sometimes if you have ever attended these tax audit, tax investigation meetings, sometimes you may feel like, am I interrogated with the police? Because the way they approach the objectives, even the modality is quite different from the audit. So don't get surprised. So if you see these situations, be informed that this is how tax investigation works. Now let us see the tax verification and examination. This is just a normal examination of taxpayers' record based on the available information. It might be verification of only VAT, specifically it might be from purchases from TANSIs, purchases from your VAT returns that you have been monthly submitting to TRA, or even purchases from your financial statement that have been submitted to TRA. But also it can either be a verification of sales, sales as per EFD, sales as per financial statement, and so on. So let's see the similarities between tax audit, investigation, or even a tax examination or verification. The aim is one or two, just to ensure the correct amount of tax is collected and to enhance the tax compliance among the taxpayers. Now let us come to look at the taxpayer's right during the TRA audit. As said by my former presenter here, Nakaki, that most of the cases are accumulated at the appeals board just because the taxpayers do not know their right during the audits at the very initial stage of the audit. So I'll be just quickly passing through these rights. First of all, the taxpayers need to be informed well in advance on ongoing audit or review. As I said, under Section 44 of Tax Administration Act, it does stipulate clearly that you have 14 days to provide this whatever information is required during the audit or investigation. Then taxpayer has a right to identify the TRA auditors. This is normally happening in town, that most of the people can be purported themselves to be tax officers from the authority. But if you suspect this might not be the officers from the authority, you have a right to request for maybe an identity card, just to be able to identify these are really TRA auditors. It's your right. It's your right to do just due diligence before starting the audit. Then you have a right to appoint tax consultant. Then, as well as you have to object in case you have any disagreement with TRA's decision, you have a right to object. Then, as well, you have a right to request the return of all documents which have been taken by officers, maybe whether during the audit or investigation. So after the completion of the audit or investigation exercise, it's your right to return back all the documents that were initially taken by the officers during the process of audit or investigation. Now, let us see another issues over here, which is assessment. Over here, let us go quickly to see the types of assessment we have. We have almost 4 types of assessment. We have self-assessment, jeopardy assessment, amended assessment, and we have final assessment. So let us see quickly one by one the self-assessment. This is issued when submitting the returns of income and financials to TRA. Suppose your returns, your accounting period runs from January to December, then you have been given 6 months after the end of your accounting period to submit this information to TRA. So after submitting your returns and the financial statement, there's when this self-assessment is printed, and it should be reflect exactly the declared tax liability in the return of income once you have submitted to TRA. Then as well, we have jeopardy assessment. This is issued based on the best judgment of the commissioner, and there are the reasons or the grounds which make the commissioner to issue this jeopardy assessment. The first one is when the taxpayer has not submitted the returns of income and financials to TRA within the time stipulated in the laws. So the commissioners may send you a notification to submit those information, and if not, the commissioner have a right or is capable of doing a basic judgment to assess your tax liability. And it is very difficult, maybe you should note this one, it is very difficult to object. Of course, the laws allows you to object against any decision by tax decision by the commissioner, but for the case of jeopardy assessment is very difficult, trust me. Why? Because if you read the new amendment under Finance Act 2020, if the commissioner has requested you to submit the required information and you have failed, the laws is clearly telling that you cannot be able to use the evidence in the stage of objection or appeal. So it is very, very, very important to avoid this jeopardy assessment. The better, the earlier. So if you are able to finalize your accounts, return of incomes, even before due date, it's better you submit those information to TRA. Don't wait for jeopardy assessment. It's very difficult to fight against this. Then we have another type of assessment, which is adjusted assessment. This is normally issued when after examination or audit. At first, you've submitted the self-assessment, then that self-assessment got amended or adjusted after the TRA audit or examination. But then we have the final assessment or amended one. This is after either the determination of objection or by order from appeal machinery. It might be from the board or from the tribunal. So these are the just types of assessment. Then let us see what should you do when you saved with an adjusted assessment. So this adjusted assessment, remember, it is issued after being audited or investigated. So the self-assessment that will be submitted once it gets adjusted. So what should you do? The first one, you should acknowledge the receipt of the assessment by a way of written notification or stamping it to avoid the possibility of falling under the time bar during either the time of applying a waiver or the time of filing the notice of objections to TRA. It is very important to acknowledge the receipt of the assessment in a way of writing. Then it should be, a taxpayer should understand the root cause of established tax liability, which is reflected on the tax assessment. So if you are satisfied, you should measure yourself. Are you satisfied with the tax liability shown in the adjusted assessment? If yes, well and good, just pay it on a time. But if there are some areas where you are not into agreement with, you may just engage your tax consultant in assisting you to prepare the formal notice of objections to all taxes that you are in disputing. So let us now see the dispute resolution process. It all starts from the TRA audit or examination or investigation. Then it goes to TRA assessment. It's either be final, no, this should be adjusted assessment. And if you are not into agreement with adjusted assessment, you may object to commissioner. Now, if commissioner still make the same decision, which makes you not to be in agreement with, you are allowed to go to Board of Appeal, after Board of Appeal, Tribunal, and then Court of Appeal. So let us see in the process now of lodging the objection. You are given 30 good days for you to be able to file this notice of objection to TRA, but then you should now attach all evidences for objections together at the time of filing these objections. And this has always been a case that most of the taxpayers were using just to file the notice itself without even attaching the supporting documents. But this time around, even the law has clarified it, that you need to attach all evidences together with your notices of objection at the time of filing the objections. Then remember to deposit the greater of 1/3 of assessed liability or tax which is not in dispute. For your objection to get determined or admitted, you need to pay 1/3. Suppose you have 6 billion tax liability, which is coming from adjusted assessment. Now the 1/3 is, we are talking about 2 billion shillings, which is still quite a lot of money, especially in this time of COVID. Suppose a person is in tourism industry and has been assessed with 6 billion as a tax liability. Now the laws requires him to pay 1/3, which is 2 billion. So if the person is not in a position to deposit even 1/3 of the tax liability, the laws is clear, the person is allowed to seek for a lesser deposit. How much are you able to deposit? Okay, fine, you are not able to deposit the entire 1/3, but how much at least you can deposit to the commissioner? Because it does not the case that does not mean that you have disputed all types of cases, all type of taxes. It must be the amount of taxes that you are into agreement with. So those one, you should just try to pay them first. But then it comes a situation whereby you do not have even a single penny. Even that less amount of 1/3, you are not able to pay it. What should you do? The law clearly says that you are allowed even to request for a full waiver of 1/3. But now requesting a full waiver or 1/3 is not an easy job, trust me. It's not just like, I'm not able to pay 1/3, so please admit this, my objection. No, it should indicate clearly the reasonable ground that will convince commissioner that you are truly not able to deposit either 1/3 or lesser deposit. Then TRA shall formally respond on objection lodged. If admitted, a tax stood over is issued by TRA. Now let us go quickly to housekeeping rules in objections and tax appeals, especially when you're receiving the documents. The procedures are, you should always have a habit of stamping or acknowledging the receipt from the receptionist. It should be normally being acknowledged that I have received it. Thank you, Commissioner, for the letter. I've received this letter on this say date. Thank you. So this one is very important. We can just see how important it is in the next slides, but it is very important to notify the Commissioner exactly date when you served with any notice in regard with TRA audits or investigation. But then you should ensure that the file is allocated for all correspondences, soft and hard. This is just to ensure the security of the document. Also, you need to discuss with TRA on every stage of the findings and the clear matters in advance. Don't wait at the last minute, because even the TRA audits are provided with a timeline to provide audit. For the case of normal audit, I think it's 3 months. Now for the case of maybe investigation, it can go even beyond 3 months. So solve the matters as early as you can, because the last minute jobs are normally stressful. So then you need to clear your schedule, because audit is as well as important. So long as your business is concerned, tax audit is very important. So this makes the end of my presentation. So, and I hope I will be receiving many questions or opinions on this. So let me hand back mic to Mustasir for him to proceed with sessions. Thank you, Mustasir.
Thank you, Sen. So I think so next time I'll not go to the doctor when I receive the TRA letter, because you said that we need to go to a tax consultant.
You should not even run away from your office.
Okay, fine. So I'll not run away, neither will I go to a doctor, because some people do get pressure as soon as they receive a letter from TRA. But I think Hussein has well explained. In fact, technically in brief, we have got 5 appellate process within the system if you are not satisfied with any decisions or any workings from TRA. I would now like Mustafa to share his part of the story handling TRA audits and investigation. Thank you, Mustafa.
Thank you, Hussein and Nakaki, for helping us to understand what are the procedures during a tax audit. How can you manage a tax audit efficiently? And there's one thing that from experience we've always noted when we are dealing with our friends TRA. As long as you manage the process properly, there's sometimes provisions in the law a tax officer understands. You know, there's a certain emotion that a taxpayer can bring in. Are you treating the tax officer fairly? Are you being honest with him? That allows a lot of clarity and a lot of leeway during a tax audit, because the presumption of honesty increases between both parties. And wherever we've seen taxpayers open up well, tax officers are as well very knowledgeable and understand the industry factors that are faced. So at the end of the day, it becomes a much more easier process. So yes, that's during managing tax audits. But what many of us still have a burning question is, how do we go forward? Once a tax assessment is issued, how do we go forward? Meaning, what are the remedies that I can put in place? And being in the industry, we've noted many times clients may have not remedied the errors that were noted in the previous tax assessment. You wonder that an assessment was issued for 2017 with certain problems. Maybe the client forgot to, or the taxpayer forgot to charge VAT on a disposal. A TRA audit covers again 2018, 2019, same issue. The accountant forgets to issue an EFD for a disposal and forgets to account for VAT. Now, sometimes that happens out of error, because nobody is, everyone makes errors. But there are times whereby you can remedy those controls. And that's what our slides are going to talk about. We aren't going to be talking about sections, but we're going to talk about practicality. How can you increase your controls and mechanisms? Are you implementing the correct reconciliations? There are some key reconciliations which have huge tax liabilities. If you had done it at that point of time, it makes life easy. But then there are other type of people who are listening to me, and they're saying, what about before a tax audit? There are people who think about precaution is better than medicine. So what do we do before we ever face a tax audit? How do we keep our in-house correct? And that will be as well part of the slide. Now let's go to the first slide. Let's have a look at this and be honest to yourself. And majority of them who are looking at these slides, I'm pretty sure you can relate to your real life example. Look right, look left, because some of you, I know you're in the office, and tell me, how do you rate your filing? Is your desk similar to person A? And is your filing room as if there was an earthquake that happened, which doesn't happen? But, or are you person B? All your filing is well managed, well labeled. If I want an invoice, if I want a delivery note, a matter of 2 seconds. Now, not that person A might not be able to find a document. We've got some accountants out there who've been in the accounting industry for 20 years, and you ask them, can you give me an invoice of 2 years ago? And you wonder, he just goes into some filing room, pulls out a box, Maybe a rat runs out and he removes as well a paper and tells you this is where it is. We faced it. Now, what happens is that person, that accountant, is holding that information back, that where are these documents? And we will be covering over the subsequent slides the importance of documents. And this accountant might know, but what is the succession plan? What if there's a new accountant that comes in? Is there a good paper trail left for the subsequent accountant or the succeeding accountant for him to come across? And majority tax audits depend on sufficient information that is shared. Trust me, 90 to 95% of tax audit depends on facts rather than interpretational issues. And that comes to our second slide. Let's have a look at this second slide. Majority of TRA audit queries are easily resolved if the facts are supported with a complete trail of documents. Sometimes we come across situation clients have only one type of document to not prove the entire trail. For example, a credit note. They might have an invoice and they might have the credit note that is issued. But what about the communication with the client as to what resulted to a credit note being issued? Was there email correspondence? Yeah. Was there damaged goods return note? All of those documents are very important, which sometimes accountants know it, but it's the way how those documents are stored. So if my friend Mr. Malia comes over here to audit, and as soon as he says, where's the credit note evidence? And there's a very clear file labeled over there, the accountant doesn't even have to go there. He just has to pull and give him the file, and it makes life easy for both parties. Straight away, the matter gets dropped. But imagine if there was some box file somewhere with delivery notes, another box file somewhere with email correspondence. Getting all of that trail of documents becomes a nightmare. And the way Hussein spoke, and Nakaki as well pointed out, you need to make submissions within 14 days. Now imagine a TRA audit that covers 3-4 years, and the accountant is changed. How long do you think you will need to get all the trail of documents? And you might end up time barred. So our key thing, which is very common, and it's a common sense, is to make sure that your documents are well placed. Another thing is think of the future and make the shift. Today, TRA, actually congratulations for bringing up the e-filing system. Now we just need to file our tax returns online. And me as a tax consultant, if I walk in or any other tax consultant walks in and he wants to understand the history, he can get it all online. That's a superb job. So if TRA have moved to soft, you need to move as well to soft. There are accounting systems that have been implemented, and we've as well recommended some of our clients certain accounting systems that as soon as you open an entry, you can double click an entry and get the documents there and there on your laptop. You don't even have to physically move to the filing room to get the documents. There are these extensions and there are these solutions. And maybe your shareholders, maybe your directors are unaware about that solutions. So the accountants out there, the finance team out there, it's as well part of your role within the organization to make recommendations to make life easy. Let's talk about the learning curve. A tax audit has happened. Tax assessment has been issued. What have you shared with your team? Remember, tax, every transaction, and there's a common lingo that we use between TRA auditors and tax consultants. And what is that? Every transaction has a tax implication, whether you like it or not. So, and remember your other departments, be it your IT department, be it your operations department, be it your sales department, they are as well involved in the daily business. So you need to as well share with them what was your experience out of a tax audit and what are the recommendations. Many times we come across people who make recommendations, but then they do not follow up those recommendations with the top management. Remember, it makes life easier. So try to remedy those errors. Key checklists. We will be discussing this in the subsequent slides, so stay tuned. Improvement in controls. Are they now implemented? Have you implemented those controls or not? So there are these common things that post-TRA audit, you need to maximize the learning curve. If you don't, you're going to end up with the same issues the same next year. And we've heard people complain that, oh, this is a copy-paste report of what happened last year. But the same exposures are there, so what do you expect? So at times, please make sure that the learning curve is there, share it with other departments and share the knowledge. Is the focus still on P&L? For accountants out there, we understand what P&L is. It's your normal purchases, sales, expenses that are recorded. Now, over the past five years, we've noted that the focus has shifted from P&L items to much more of a balance sheet item, because there are certain items that they can test in the balance sheet which have further tax exposures, and the TRA have understood this. Tax audits that have happened 20 years ago, I wasn't there in the practice, but otherwise I would have a white beard, but anyways. But I mean, those who have practiced over these years, they would have noticed that there's a change in how tax auditors do their review. They're now much more focused on balance sheet items. Even out of financial statements checks have been implemented. They're using different softwares. They communicate with other revenue authorities across the world. They use different searches, mechanisms. You can see that they can, because now that the e-filing will as well be implemented, I'm pretty sure there would be other checks and balances that can happen. Common checks and balances, VAT inputs claimed by our clients, which are matched against sales. I'm sure many of us have come across such tests. Let's look at deemed and allocation of income concepts. TP. For those who were there in our previous seminar, Zainab had taken us through all of the TP risks that are there. But in a nutshell, you need to understand that finance team, not only the finance team, even shareholders who have related party transactions, meaning transactions with people who are probably have good control over the company, who are relatives, subsidiaries of a holding company, who are the same, all of them need to look into the TP. This is a new, I wouldn't say new, but something which has been quite rigorously audited over the TRA audits that we faced. Let's look at what tests are being made on revenue. There are several tests that TRA do focus on revenue. They do review your EFD, they review your financials, they review your VAT return, and they can even review your TANSIS. So what we recommend out there is to make sure that you reconcile these, your EFD with your financial statements, with your VAT returns. Exporters as well, for those who are doing pure exports, you need to test and ask your customs agent to pull out a TANSIS report for you. Your clearing and forwarding agent can pull out an annual export that you've done, and you can compare it with your sales, maybe export sales that have been declared in your VAT return. There are some items which would always not reconcile, which is there. TRA as well understand it, but the onus of proof lies on you. So you need to make sure that you reconcile this often. And if there are any errors or any matters that require straight attention, you can check with your accounting team, you can check with your consultant, your auditor, you can even call up TRA. They've got a good call center, you can call them up and ask them about these errors and how to go about it. Let's talk about amendment of VAT returns. Many times you might be doing your reconciliation and you've come across a VAT return which might have a human error. How do you go about it? Well, errors are defined into two subsectors. There's a minor error and there's a major error. A minor error is whereby 1 million shilling or more of VAT impact is going to be impacted in your, that you probably made an error. So your error is around 1 million shilling VAT amount. What you just have to do is in the subsequent VAT return, you need to make an adjustment, and you need to make sure that you notify TRA. Without notification, there could be still issues that could come in during a TRA audit. So another error is major error, whereby your VAT impact is above 1 million shillings. You need to apply to TRA to revise your VAT returns. And together with the revision of VAT returns, you need to, we call it an amendment of VAT return, you need to seek for an approval. Now in practice, it sometimes may take time, and therefore what we recommend normally is for taxpayers to go and follow up the amendment of VAT returns. And sometimes what happens is as well, taxpayers in practice, they attach the amended VAT returns. Another thing to note is don't wait for the approval from the commissioner for the payment of taxes that you might have understated in the VAT return. So you need to pay that immediately together with the interests, as it still does accrue. Credit notes are a common issue. I spoke a little bit about it, that you need to make sure that you have the proper trail. Now, this is a matter that is almost all TRA audits do touch on credit notes, and you need to make sure that you follow the procedures. We've as well once issued a PKF journal talking about how do you issue a credit note. So please make sure that there's an adjustment note attached to a credit note, and this adjustment note is obtained from the TRA website, and you need to fill in the particulars. So every credit note should have an adjustment note. Otherwise, there's a possibility during a verification or TRA audit, they might question the validity of the credit note that you present. Another key issue that's out there is bad debts. Many businesses do face the risk, especially credit. Those businesses who deal in credit would face an issue of bad debt whereby people don't pay, the person has run away, or the person doesn't have, your customer does not have enough funds to make payment. And there are different treatments. There's the income tax treatment, and there's the VAT treatment, which is very, very clear on how to go about it. However, there are challenges, practical challenges that we face during tax audits is when can you allow an expense of bad debts? There are several tax cases, and normally during our experience, we notice that TRA tend to allow bad debts from an income tax perspective if you have proper legal documents in place. That would be a liquidation order, a bankruptcy, all of those documents. However, another question comes in, always a practical issue is for FMCG distributors. They have petty debts. Imagine you sold somebody on credit in Kariako and the person hasn't paid you back. And when you go visit that shop, there's another trader already over there. So where do you go after that person, and how do you really follow up the legal documents? However, that's what we are saying, the paper trail, if you have a good trail of documents, you've documented everything well, we do notice that TRA at times do allow these deductions of bad debts. But at the end of the day, you need to really prove beyond doubt that these bad debts are true bad debts and cancellation of sales. Additional controls, make sure that you maintain your VAT returns in Excel. We've noted many times clients, you see purchases can be uploaded, all your input details. However, from a sales perspective, when a TRA audit covers 4 or 5 years, it normally becomes a struggle to understand why what are the sales values in the VAT return. So we normally recommend clients to make sure that they maintain an Excel sheet. Another matter is VAT account. We've noted many people with VAT accounts, but they do not even reconcile with the VAT return. So it always creates a problem during reconciliations. Ensure for purchases whether you need to make sure you receive an EFD for you to claim input VAT. So that's as well, you need to make sure that the EFD invoices criteria, which we'll even follow up in the subsequent slides, are met. Other issues to take note of are all professionals have to be VAT registered. So if you're dealing with your lawyer, your consultant, an accountant, an engineer who calls himself to be a consultant, he needs to make sure, you need to make sure that he's VAT registered. There are certain other criterias which you can take a look into. I've covered, we need to even discuss VAT on reimbursement. VAT does not apply on reimbursement. VAT claims, you need to make sure that if they're entertainment in nature, you might have gone out on a dinner with a potential client, and that food bill, can you really claim it in your VAT return, is a common question we get asked. From our understanding, and with a couple of TRA audits that we've dealt with, we feel that this is much more of an entertainment in nature and may not be claimed for VAT purposes. There's another matter on periodic statements. If there are bank charges, make sure you ask your bank for a periodic statement. Some of the issues that are covered in corporate tax that you need to make sure that the controls are in place are unrealized foreign exchange movements. You need to make sure that all your unrealized, you maintain correct schedules for your unrealized forex to be treated as allowable foreign exchanges. You need to make sure that you as well look into your refunds and set-offs. There's a time limit for you to claim a refund and a set-off. Is 3 years, so make sure that you claim on time. Some of the employment tax risks that we've noted, and just I'll mention a few. And the most common question we normally get is whether a consultant, a person, normally they're individuals who come and provide services. How do you treat him? Do you treat him or her as an employee, or do you treat them as a consultant? It's a very common question. The reason why that question is common is a consultant, you're supposed to deduct 5%, a resident consultant. But an employee would be subject to 30% pay tax rates. So based on that common question, what we recommend is one of the key tests is this consultant producing you EFD or not? Because that means if you're saying that I'm a consultant, I have to be a registered businessman and I have to have an EFD to generate it. So that is, so if a person calls himself a consultant, he needs to make sure that he produces an EFD. Withholding taxes, a common question and a common error is that when do I subject and pay withholding tax? It's basically on accrual. So today, if you receive an invoice, but you're planning to pay 2 or 3 months down the line, withholding tax has to be paid when you receive the invoice. So you cannot say that I'm going to pay the supplier in 60 days, and that's when I'm going to pay TRA the withholding tax. No, you need to pay the withholding tax when you receive the invoice. Another key issue we've noted is net of tax contracts. And this doesn't only apply on withholding tax risks, it as well applies on employment tax risks, whereby many contracts are entered into net of tax, saying that you will be paid 1 million shillings to an employment contract would be stating you will be paid 1 million shillings net, meaning all the taxes will be paid by the company. Now, these are tax unfriendly arrangements, and there's several tax cases which state that these are not allowable under the tax laws of Tanzania. We've added a chart of some of the withholding tax rates, which you can go through. Another matter, a common topic that was possibly over the past 2-3 years is we've noted increase of use of statement of tax account. When taxpayers go and request for a tax clearance certificate, normally a tax officer doesn't directly print, he does a historical check on your compliance and whether you've paid all the taxes, then only you're able to get a tax clearance certificate. So, statement of tax accounts are maintained by TRA. In that tax account, TRA maintains all the payments you've done during the year. It as well makes, it records all the assessments that were issued. So when you go to apply for a tax clearance certificate, the tax officer tries to understand whether do you have any outstanding taxes due or not due. And based on that, they might issue you a demand notice. They can even issue at times agency notices if you did not if you did not comply to the demand notices. And normally these are maintained by the TRA. It's not maintained by taxpayers, but there are key issues that taxpayers normally, when they're making payments after an assessment, they're not putting in the correct codes when making the payment, which results to variances. So it's always fair whenever you go for your tax clearance certificate, if there are any variances, try and reconcile them, clear them out before it gets too late. Because one day an officer can wake up, check the system, and see that you have an outstanding based on a tax account and issue your demand notice. So try address these at the earlier stage. But before that as well, you need to make sure that you make payments correctly and the assessments are all well reflected in your tax account. And this, because of the new e-filing system, would maybe even reduce all of these reconciling items. And therefore, because currently what's happening is when taxpayers are registering a payment that might have to be processed, the payment may not be reflected, but now everything is real time online. A taxpayer can easily see whether his tax payments were reflected or are not reflected. Some of the issues relating to customs, and customs we've noted is commissioned by a different team. It's a post-customs audit. It's through Commissioner of Customs and Excise who does the review. It's not through the Commissioner for Domestic or Commissioner for Large. And there are some key items which they do test, and they test your TANSIS. Previously, there was a custom system, Ascuda, now it's TANSIS. And they review your imports in the TANSIS system. They compare it with your VAT return. They even review your TANSADs. There are instances taxpayers have faced that they are fabricated documents. There are times whereby imports are there, you've paid the taxes, but the document might be fabricated. Or there are times whereby as well, there are documents which are not reflected in the system. So during a post-custom audits, all of that gets picked out. Another important thing is that we always recommend that it's best that taxpayer pays their own taxes so that they have records. There are times whereby taxpayers pay a certain amount to the customs agents and the custom agents makes payment. That's as well fine, but at least a request for proof of payment so that in case during a PCA, it's easier for you to reconcile any matters. So that marks the end of our slides. But as that was explained by Musansir, we love questions and answers, and I'm sure many of us have question and answers. So we'll all look forward towards them.
Thank you very much, Mustafa. I can say you have covered majority of the areas that we face challenges during the tax audit. I would request all the participants who are there watching us, the slides do give out some of the topical issues, VAT, credit notes, foreign exchange, STIN card. These are common issues, cuts across many of the taxpayers. If I have to pick 20 tax audits that we have managed as PKF, I'm sure among those audits, around 10, 15 issues cuts across, whether you are a manufacturing, you are a mining company, you are a contractor, you are a trader. What Mustafa has covered is basically these issues cut across. So please take it seriously because we want to ensure that the process becomes much more easier, much more friendly with even TRA officers. You should have time to even have a cup of tea with the TRA officers, isn't it? Maria, you want to have a cup of tea with the taxpayers as well, and not always go look for documents or being thrown to a store to look for credit notes. So let's without taking much of the time, I know this session is more of practicality, what you have faced, what are the challenges, and let's look at the questions that have come in, and we start answering the questions and share our point of view. TRA will share their point of view as well. And so maybe I'll ask our friends from TRA to start taking questions one by one. and wherever we need, we will also chip in to help. Mama Malia will start with the first question.
Yeah, thank you, Mr. Mustansiri. First question comes from Noela Shaw. Where can I get this book, Taxpayer Charter? Yeah, Madam Noela Shaw, the Taxpayer Charter is available in our TRI's offices, covered countrywide. So just visit anyone which is nearby to your place. Thank you.
The second one.
The second question, when discussing about appeals to TRI board and TRI tribunal, I would like our resource persons to discuss about the impact of Court of Appeals decision in the case of Pan-African Energy Tanzania Limited versus the Commissioner General. If indeed jurisdiction of TRI board is limited to appeals against the Commissioner's tax assessment decision, then what happens to all other non-tax assessment decisions? Most of them being administrative decisions, such as application for waiver, extension of time, or revocation of licenses where applicable, etc. What are taxpayers' remedies? Does the Court of Appeal decision in Pan-Africa assist the Commissioner in his day-to-day Does the Court of Appeals decision in Pan-Africa assist the Commissioner in his day-to-day management of his tax portfolio, or has the same complicated matters? Fincan Bureau. Yeah, I think we'll share the panel on his question. Just go up. Let me start see the questions as we can respond. Yeah, I think based on the topics of this discussion, and as far as this question relates to the decision of the court, I think we cannot give a time to discuss on it.
Maybe if you allow us a few words, because Pan-African Energy case is a well-known case that is there. And just to clarify what question is being asked is that whether, based on the Pan-African case, is it only objections towards tax assessments that can be heard, or decisions against tax assessments can be heard at the appeals board? Of course, this decision brought in a lot of questions amongst tax consultants, I think even TRA and even taxpayers, but it's a matter of not tax assessment determinations. It's a matter of whether can the appeals board, I think the actual question is whether the appeals board can entertain any decision from, yes, relating to non-taxation. And I think it is possible. The issue is it can relate as long as it's an objection decision that has arrived. So one of these key decisions in the Pan-African, in other cases as well, is that whether a rejection of waiver can go all the way to appeals board or not. And the ruling was basically that you can only go on objection decision, and a waiver determination is not an objection decision. And this creates a lingo whether, where do we go next as a taxpayer if I do not have a single shilling of a penny and I can prove that I cannot make any payment of 1/3, where do I go as a taxpayer? So I feel that, and currently what's happening is we'll share our experience that currently what happens is taxpayers, when they are rejected with a waiver decision, which is not a tax assessment, basically, it's a normal decision of the commissioner, they file an objection against that decision. And at the same time, they do go to the appeals board. So people are basically, taxpayers are working parallelly on that decision. Yes, it will take time for us to understand exactly what is the mechanism, but currently there's a parallel route that taxpayers are using. So in order to try and achieve some level of hearing ground for a taxpayer, because if as soon as a rejection is there and there's nowhere else to go, they feel that there's a need, at least let us object. And I've noted as well, TRA as well, have started understanding waiver decisions, and they are ready to accept some lesser deposits. So as long as you go for out-of-court settlements, normally it works well with TRA on waiver decisions. The way Hussein said, the commissioner or the TRA will say that we cannot perhaps give you full grant of waiver based on your financial position, deposit an X amount of money, and we are willing to accept your objection so that it goes under determination. That's the experience sharing that we've had.
Just to add on, it's very important, very many waivers that we have seen, our arguments are more operational. You will say, I don't have money. I don't know, I'm sick. Sometimes you'll say, fine, I have to go, I have to pay monthly pay as you earn, monthly VAT. Many of the arguments are very, very not solid, because you need to understand that yes, commissioner has been given power to waive the deposit of wanted. Up to what extent it is his judgment, but your arguments should be very solid enough to influence his decision. And when I say influence his decision, you clearly need to show him that paying that wanted, how is it going to impact the business as of today and even going forward. So arguments should be very, very solid. And sometimes you also need to bring out issues of where assessments have arithmetic errors. Read around the objection. Sometimes assessment may be a tax officer forgot to capture loss brought forward. So those things needs to be explained in a very systematic manner. So even person who is assessing the decision of the waiver can understand that where does the waiver argument comes in. Let's proceed. Next question. Yeah, question number 2, yeah.
For compliance purposes, do we need to have the withholding tax certificates generated via gateway system to be stamped by authorities, given they are original and issued by TRA itself? Mutua Edward.
Thank you, Mr. Mutua. Thank you, Mr. Mutua. As you have asked, for compliance purpose, do we need to have the withholding tax certificate generated via gateway system to be stamped by authorities, given they are original and issued by TRA itself? Nowadays, if you want to get your withholding tax certificate, you can get it through, you can download it through our website, simply because once the withholding tax has been paid to TRA and received by TRA, automatically, when you load yourself as a withholdee, then you can get your withholding tax certificate and print it and save it for yourself. So there is no need of coming to TRA and asking for withholding tax certificate to be stamped thereon. Another question, what is the effect on changes in law in a tax audit covering periods prior to changes? That is, are the new law regulation applicable by TRA during the audit, or can TRA apply the new law to the previous period under audit? Nicole Vegas. When we are doing our tax audit, and we have the new law tax changes in place. Normally, the previous assessment or the previous findings that can lead to assessment will be based on the previous provisions under that particular law. So we cannot take the current changes to assess the previous one, but we go in line according to the prevailing time. The prevailing provision at that time where the findings indicate that there is an assessment that is required to be assessed and paid thereon, we refer to the rate applicable at that time. Then another one, it was mentioned that TRA provides training for the new system, but generally the training program is not published. For example, this new e-filing system is introduced, but we don't know when TRA is going to provide it training. Also, we request TRA to give us sufficient time to implement and learn new system. Thank you, Jigna Badian. Okay, I agree with you, but we normally conduct training according to the market segmentation of the business. Currently, we are training our staff, and thereafter we'll go for training with consultants and then other business sectors. So you can just keep on, and what I'm taking from you is to publish our program so that anyone can have an avenue for that one and participate accordingly. So we'll publish it. Regarding tax investigation, there is no timeline. However, I believe the law states the maximum period for which the documents to be maintained. How will this be dealt with if the documents are disposed of after the period of maintaining documents? The question of tax investigation, as our colleague earlier presented, the difference between that one and the audit, normally we conduct investigation when there is a suspect of fraud. And also we can go beyond the time limit for keeping records, but through investigation, we can also use, because our tax officials who are undertaking investigation, they have different multi-skills in investigative skills. So they can use that one, or they can go to the third party also to obtain information. Maybe, do you want to compliment on that?
In addition to the question relating to the implementation of documents of 5 years provided under the Tax Administration Act Section 35, but the law is clear that in case you are given a notes of investigation, you have to maintain those documents even beyond 5 years provided that if you have already, you don't have those documents anymore, and the investigation is around you and if you are not maintaining the documents now, and the investigation, which covers the period more than 5 years, I think the commissioner can use the best judgment and the available information on him assessment. Which is the control document, return or Tansis info posted? Francis Ngira asked, which is the control document, return or Tansis info posted? It's not clear. Musa Mustafa, did you understand this question? Which is the control document, return or Tansis info posted?
Maybe if I understand, he's trying to check where would possibly, that's his thinking, that where would you start to do the audit and which documents would you start comparing? So I think both documents TRA will be using. For because return is what you prepare and submit to your commissioner
Yes.
of your tax position, and TRA will come if you show your purchases. If you show your purchases then in the books, then TRA obviously will compare what you show the purchases in your books or in your returns against what has been declared in the taxes. So all documents do interplay with each other.
Exactly. And always the commissioner, when compare the two documents, create a query to you on the information which is in the favor of the commissioner. It is unlawful. Is it unlawful to not surrender any EFD error made until it was noted during a tax audit? No, ombeni.
Yeah, Madam Noah, I think should be she or he, Noah. Anyway, Noah, your question, now we are saying if there is an error regarding to EFD, it must be reported instantly to the TRI office as it was presented by our presenters. However, if that happens and during the audit that you did not notify the TRI, then the good thing is to have evidence of the records. Yeah, say maybe there was a typographical error, maybe on figures or caused by credit note. Then if the document is presented during audit, then the matter will be closed. Question number 8, what should we do if we have filed for a paying less amount and the TRI rejects it without any reasonable ground? Yeah, the law is actually very clear that either of the two, 1/3 or lesser amount, or you can even request for a waiver. So it is the best judgment of the commissioner. Perhaps the commissioner is not convinced that we cannot make a deposit of 1/3. Maybe if through the bank statement, they might find that there is a sufficient money that can cover for that 1/3, then the commissioner cannot easily accept for a lesser amount. So you must be in the position really that you are not able to make that 1/3, or you are not able even to pay a less amount for your objection to be admitted. Question number 9 by Anonymous. You mentioned that we should apply for a waiver of 1/3, but what if that is not granted? You still have to convince the commissioner that you really not, actually the answer is similar to question number 8. You must convince the commissioner that you are not capable to make deposit of 1/3. Question number 10, is it normal practice for TRA to reject self-assessment? Self-assessment cannot be rejected. Mr. Andrew, we have actually TRA shifted, and that is the best practice worldwide, that we encourage self-assessment. That will come to be rejected or will come to be assessed after submitting your tax return later on, not by the time when you are submitting the self-assessment return. Maybe Mr. Adam.
Yeah. He asked whether whether it's normal practice for TRA to reject a self-assessment. Self-assessment by the sense of assessment as per return of income, as per Section 94 of the Income Tax Act. Because if you look at the first schedule of the Income Tax Act, it defines self-assessment with reference to Section 94 of the Income Tax Act, not self-assessment with regard to the statement of estimated tax payable. So rejection, of course, it cannot reject immediate once you submit it, but if you look at Section 94 of the Income Tax Act, if commissioner believes that self-assessment as per return of individual if he is not satisfied based on the available information to him, nature of the business of the taxpayer, he can do that, but for the case of individuals, not for the case of the corporation. So that can be done for the self-assessment as per return of income of individuals. Yeah. TRA office in some.
Just to make the question other way around, the meaning of this sentence could be like this. Suppose the taxpayer is filing the return of income at the end of the year as required by the law under Section 94, but then in the process of capturing the tax liability, suppose the TRA has forgotten to take into account the tax credit, whether it's provisional returns or withholding tax credit, then this one resulting to a taxpayer being in a payable position. So is that a normal process? Or is that a normal practice? And if it is yes, so what now is the way forward? Does the taxpayer now need to object through the formal objection procedures, or like normal clarification letters, communications, something like that?
Okay, for the case of self-assessment. Self-assessment, that's the decision of the taxpayer, that's right. But what the problem is when capturing the information to the system, that's we can call it an error. In my view, that you can make communication through the normal letter, notifying the regional manager that we have found there is this error, we filed our return, but in your capturing, the commissioner has not taken into account the tax which are paid in advance. I think it cannot be go to the process of objection. Yeah. Question number 11. Is it 11? Yes. TRA office in some places, such as Arusha, never stamp the taxpayer's copy of documents submitted. Instead, they sign a dispatch book. Is this a correct approach?
Yes, it is a correct approach. You know why? Because sometimes when we were stamping the documents, other people who are not honest, they use that stamp and then they go and make their own stamp, the fake stamps, based on the one which they have, based on the copy which has been stamped. So it's ideal for a person when you are sending your document to TRA, take it with your dispatch, then the receiver will sign on the dispatch. Yeah.
Sorry, just to add on, actually what it cuts across the last two questions, one of which was against what if there's an error in the self-assessment, and as well on stamping. So now the e-filing system, once again, which it will completely remove these errors, because if there's any error, it will be self-implied. And of course, we've yet to test the e-filing system, and possibly as time goes on, there are people who might make errors, human errors when filling in the return, and we will see how the experience goes with that. So this one as well will reduce a lot of questions and a lot of correspondences manually on correction of self-assessments. So that's as well a thumbs up that will come up due to the e-filing system.
Question number 12. Is it possible to have a tax examination without a tax audit being conducted for that period? For example, we have an examination for the year 2016 to 18, and then audit for year 2019. Is it possible for the same issue raised in examination being raised during an audit, for example, EFD versus return despite having been resolved during examination? Yeah. The process of audit, it is sample-based, based on the factors. When we audit returns of taxpayer, we do not audit 100% of the returns. We make a sample based on so many factors, and most of them are risk-based to the government revenue. We do examination for other returns which we think that they do not have much risk that we have to undergo the process of audit of requesting document and so forth as provided under a tax administration general regulation. Your question, if possible to examine without audit, it's okay. Your example, you have cited example, that we have examination for 2016 to 2018, yes, we can do that examination. And if we think that there is no any risk in those years, but there is risk for 2019, we may conduct audit for 2019 and and of course we can conduct audit just for 2019. The other question, is it possible for the same issue raised in examination be raised during an audit, for example, EFD versus return despite having been, yeah, the answer is yes. The answer is yes, because examination, it does not involve in-depth verification of the documents, but the audit does. So if there is some of the issues which were not captured during the examination, definitely may result to the additional tax liability during the audit. But if the audit covered the same period of which the examination is done, the tax which was established through examination on the same facts and for the same period definitely will be deducted. Someone said now the contested tax assessed are to be 100% and not 33%. And what happens if one wins? Will it be termed as receivable? Yeah, I think he's asking the question relating to when the commissioner is in doubt that or is satisfied that the person is about to live in URT. Definitely, if the person wins, I think that he has to undergo the refund process. Mama, you can add on that.
You are quite right. If someone wins, then he has the right to ask for refund. So the best way is just to make sure that everything you keep it properly, and if you appeal and at the end of the day you win, then your right will be there. We are not supposed to deny your rights. How many times another question, how many times should a tax audit be done per year? I think it is once. But it depends, because during the audit, our counter revenue department dealing with the audit, they have their audit plan. They have their audit plan, and the audit, there is a selection for audit purpose. There's area where there is a risk-based, you can be audited even twice in a year. But where there is no risk, you can be audited once in a year or once after 3 years and so on. This question is from the last seminar. Is a presumptive taxpayer required to file a return of income? A presumptive taxpayer, if he decided to prepare returns, final accounts, then he has to submit the return, because the presumptive taxpayer who is willing to prepare accounts means he wants to pay according to the to the profit. Unlike those who don't want to prepare their accounts, they're paying according to the turnover. So he has the right. During a tax audit, another question, during a tax audit, can the period to be covered mentioned in the TRA letter vary going backwards on request by the TRA officer? We need to be precise. If we are going to someone for audit, we have to let him know which area are we going to cover. They can go backward for the case of investigation, because where there is a suspect of fraud, then they can go beyond the period covered for audit, unless there is something.
Just to add on that, I think so the process has much more improved now, because I see letter of impending audit somewhere, which is going to be done in November, December. The letters are coming out now, covering the period, telling the scope. So TRA has gone an extra mile to inform at least 3-4 months in advance that we are going to come and conduct the audit. Yes, if there are areas that you are not comfortable, you can still write back and seek more clarification. Go ahead. Go ahead. Scroll down. Yeah.
When a person is employed on secondary employment and his pay does not reach a taxable threshold, do you still tax him at a flat rate of 30%? Normally, when you're talking about the secondary employment, this is a payment other than the primary one. So it doesn't consider whether you reach the threshold or not. You have to pay 30% of what you are going to be paid. Another one, if withholding tax is deducted and paid at the time of accrual and later when we started to pay balance, there may be foreign exchange impact. Do we need to pay excess withholding? If there is excess, then you have to pay for that one. When you have excess, you have to pay for that one. When doing, another question, when doing reconciliation and unfortunately you find some errors, let's say major errors which are difficult to be corrected, what action do TRA undertake? If you made an error, you have to notify the TRA. How does that error occur and how are you going to rectify it so that we can have a smooth?
Let me add one.
Okay.
Just an idea. Yes, I know sometimes errors are committed, especially VAT versus EFD reconciliation. Very many taxpayers are still not very conversant on that recon. Yes, you have errors. Maybe today, an example, we take your EFD sales is showing R1 billion shilling and your VAT sales is showing 500 million shillings. And we can understand that's a huge difference. And you come to realize there were some mistakes done in your EFD machine. You can't find the evidence. Of course, the law is very clear. The onus is on taxpayer to prove otherwise. But even when you are having discussion with TRA, you need to prove, you need to go extra mile to prove that that was an error. Possibly, you can do a reconciliation of your stock to tell TRA that, look, my stock was only 400 million. As a result, even in the best judgment, the sales could only be 500 million. And even my bank receipts of the customers were only 350 million. So there is no way I could have reached a sales of around 2 billion shillings. Yes, you have to take actions to prove to the officers, yes, this was a genuine mistake. And there is a practical difficulty in getting the substantive document. You need to use alternative means to convince. Of course, the judgment is on an officer, but yes, you can't just leave it and tell him that this is an error. Yes, it's error. Then what did you do?
I'll jump on question number 21 and leave it to Mr. Malia. Then what is withholding tax? This is just a simple question. Withholding tax is the tax which has been withheld. And the one who is withholding it is the withholder. of which is going to remit because he withhold it from the withholdee. How much is the withholding tax on a foreign consultant? How much is the withholding tax on a foreign consultant? That one should depend with how much, because we have the tax rate for withholding tax for a foreign consultant will be a non-resident.
Yes. Yeah.
Then we have the rate which is 15. And what is the procedure to claim VAT on bank charges? The procedure for claiming VAT on bank charges, you have to ask for the periodic statement from your banker. And they are supposed, according to the Retail Miscellaneous Amendment for 2018, the banker is supposed to give you the periodic statement on or before the 10th of the following month so that you can incorporate it in when preparing the VAT. So the procedure to claim VAT on bank charges, you have to use the periodic statement which you are obtaining from your banker on monthly basis. So that periodic statement, the VAT declared in that one is allowable, so you can claim it. Another question, is it possible to have a similar webinar for non-profit organization? What their obligation are, how they should present the information, the audit, etc., and requirement? I think if they're asking whether it is possible to
It's
organize
possible.
so that
We'll take this comment on board, and hopefully we should be able to conduct one seminar specific for an NGO.
Is the tourism industry, in the tourism industry, is guiding fee deducted withholding tax of 5% as a professional service, or the guide is treated as a normal employee and hence withhold payee and SDL? I think the issue of tourism industry, they are considering, they have the meeting. I think we're expecting to come up with the special practice note for tourism industry. So whatever, whether fees, charges, and everything will be incorporated for that one for more clarity. Another one said, sorry, I don't quite understand whether VAT can be claimed back on sales that eventually become bad debts.
I think if I think Mr. Mustafa will add on this, but what the fact that if you claim, if you have in anything which you have reported in VAT return, and later on there are some adjustments which you have to make based on any other reason, including the bad debts, you have to make adjustments. You have to make adjustment as provided under section 70 of the VAT Act. Is there a maximum period of audit? What documents are submitted for over a year and there is no response from TRA? Is there a maximum period of audit is 5 years if there is no any intent error, there is no any fraud. The limitation under the law is a 5 years, the power of the commissioner to adjust the assessment. Yeah.
When I look at the question, I got the difference understanding, because the question, it says, if there are any maximum period of audit, so it means in the process of conducting audit, how long should audit take? Is this 1 month, 2 months, 3 months? Yeah.
Yeah, if you look at the law does not give the commissioner the maximum. And the reason is completion of the audit is the matter of facts. If you want to give the maximum time for the commissioner to settle audit, there are cases of which comprise very complicated, very sophisticated transaction made by the multinationals. Even if you give them 1 year, that case cannot be completed. But we as a TRA, we have our own standard of which auditors are required to complete their audit within that period of time. Some of them range 3 months, some of them 6 months, based on the complexity of the case. Yeah. What documents are submitted for over a year and there is no response from TRA? Have you understood the question?
Yes, the question is that if I've understood well, that documents were presented to TRA for audit for 1 year and yet the audit has not been completed. I think here is the matter, it actually lies with the officer who is handling the case. So he should write a letter to the regional manager to inquire for the position of his audit progress, whether there is something missing or additional information so that the matter can be completed. Yeah, what if we have hired a resident individual consultant and do not provide EFD receipt, and he or she has been appointed for a short-term period? Do you still consider them as a consultant and deduct 5% or treat them as employee? What would be the correct treatment? I think Mr. Mustafa clearly stated during his presentation that in order to assess either 5% or 30%, it is relying to provision of EFD receipt. Now, for TRA to recognize whether it is a consultant or employee, I think consultant should be having a firm. And by having a firm, he should be having a team with TRA. So you will fall under resident, consultant, and 5% will be deducted. Otherwise, he's a normal employee.
Yeah, of course, to add on that question, in my view, to know whether this is a consultant or an employee, the one who is supposed to know is the one who hires the person. And if you hire him as a consultant and you know that the law requires the consultant having an EFD, I think you can ask him that, please, you are my consultant, according to the law, go and acquire a EFD machine. Thank you.
Maybe just to add on, in fact, this question was just asked me yesterday. Someone said that I'm doing an engineering services for one of my friends' contractor. So what are my tax obligations? So I told him, not only EFD, your EFD also should be VAT registered. Because you see, any consultant who is registered by a professional body, not only are we talking of EFD receipt, but also VAT, we should be VAT registered. So yeah, we have to be careful on, especially consultants who are registered by various professional bodies.
Yeah, question number 30, what is a physical invoice and which suppliers need to issue? Physical invoice is the one generated by a fiscalized EFD. Now, which suppliers? It must actually, if it is physical, it must be generated by an EFD machine. Yes, yeah. Now, which suppliers need to issue? I think all taxpayers who are using the EFD machines, they all fall under that category. Yeah. Question number 31, what about taxpayer who wants a VAT refund of 80 million and more? What are the challenges and is it worth it? Is it worth it? Mr. Kobelo, the question is not...
Just to repeat, what about a taxpayer who wants a VAT refund of 80 million shillings and more? So 80 million shillings and more, should they lodge for VAT refund? I think the first thing is, are you required to lodge for? Are you meeting the requirements of VAT refund, because there are requirements. For example, if you're a pure exporter, or in the subsequent period, you're always going to be in a VAT refund. That's what the question is. I mean, 80 million shillings is a lot of money, Mr. Malia, don't you think? It's a Prado, a brand new Prado or something. So, I mean, if it's your right, if the law permits you, the permissions are there, lodge for the VAT refund. But the question comes in is, make sure that you verify first that are you entitled to a VAT refund. There are times whereby a taxpayer might be having huge revenue in the future that may reduce the VAT refund through VAT credit mechanism being offset. Then there are times whereby you need to look at your type of business and whether you should proceed or not for VAT refund, unless Adam, you have something more on that.
Yeah, and in addition to that, in order to assure yourself that you really deserve to be refunded, usually all refunds should pass through the tax consultant, so that they can issue the certificate of genuineness. So before even thinking of 80 million shillings, it must be certified by certified public accountant to see the correctness of the refund claim. Otherwise, you may think you really deserve, but in the real sense, you don't have the credibility to be refunded.
Thank you, Mr. Malia. I think so. We are almost coming to an end. I know there are so many questions from the taxpayers, which also makes us believe that very many taxpayers are interested to know what are the rights, what are the privileges in the Tax Act. I know it's a Friday. We are almost, people want to go home, or people want to go and enjoy themselves, or even relax. So don't worry, as your tax consultants, PKF and TRA, we will take on all these questions, and possibly we should be able to send you a response by end of next week or two. And don't worry, you can go, relax, and we will take up all the questions. Once again, asanteni sana. We are pleased to have you all, and let's look forward to the next webinar. Asante sana. Thank you.